See, as I have discussed earlier, most of your trading performance will be as a result of stocks that you choose to reject rather than stocks that you select. This is very important point. Your trading performance largely depends not on what stocks you buy, but on what stocks you choose not to buy. Okay. Which is why I have created this playlist where I discuss stocks which come on my basic filter list. But when I look at some other data related to the stock, like the chart or the price strength, relative strength ranking, and things like that, for one reason or another, I choose to avoid the stock because we know that trading is a game of probabilities, and I want to stack the deck in my favor. Okay, so one example I would like to discuss today. This stock came on my watch. Sorry, the list of stocks after I filtered the entire stock market after putting some basic filters. So this stock came on that list. There were roughly 45 stocks on today's list. And I was looking at this stock. This is Amara Raja Energy. Okay. Now I have drawn a base here. See, it's a nice base. However, if you see the yellow line, which is my buy point, comes in the red zone. The red zone is the lower half of the base. So if you look at the moving averages, see the blue, the green, and the red, the 50-day moving average is above the 150-day, and the 150-day is above the 200-day. So it is a nice stage two uptrending stock. That's a positive point. Second, the base has more than 10 candles inside it. So this is the first candle, the high of the base. So I start counting from this candle, candle one, candle two, candle three. I want minimum 10 candles in the base. Okay, so there are 10 candles in the base. So that is another criteria that looks good on this base. Then if I draw the base for you, so see this is point 1, that's point 2, that's point 3, 4, 5, 6, 7, and 8. So I need minimum 4 points in the base, which is 2 contractions, but this base is giving me 8 points in the base, which is twice my requirement, which is fantastic. However, if you notice, these points are drifting down. Okay, I would like the point number 7 to be in the green zone or in the blue zone at least. But that is not the case here. The yellow line is in the red zone. So the stock seems to be drifting down rather than giving us a healthy consolidation. This is the reason why I am not comfortable buying the stock. See, I am not saying that the stock cannot go up. The stock could go up here. Tomorrow it could shoot up 20%. Okay. However, what's the probability of that happening? The stock seems to be drifting down. Okay. In majority of such kind of basis, the price is likely to continue to go down rather than go up. Okay. That is the reason I would avoid such a stock. Apart from this, if you look at the data, this is MarketSmith India. I have opened the page for Amara Raja Energy. So if I expand this, let's have a look at this page, okay? This will be nice information for you. Let me, yeah. So I'll put myself here. Now have a look at this data related to Amara Raja company. The master score is 66. Ignore the master score. What is important is the price strength and the EPS rating. So price strength is 89. What does that mean? This means that Amara Raja as a company, the 52-week performance of this company is better than 89% of all the stocks in the Indian stock market, which is very good. It's almost like the company is in the top 10 percentile when it comes to the 52-week performance. But you look at the EPS rating, okay? EPS rating is 72. That means there are in the entire stock market, there are 28% of companies which are doing better than this company. Okay, and 28% of, let's say, 5,000 stocks, That's a lot of stocks. So thousands of stocks are doing well on an earnings basis compared to this stock. So why should I put my money in this stock? I should be focusing my attention on those stocks which are making great amount of money. Okay. Now, if I click on consolidated, you look at this, the latest quarter, the earnings growth is 19%. Okay. Sorry, for consolidated, the earnings quarter, the latest growth rate is 21%. Now, Patrick Walker, who's been a veteran trader and he's been trading the market for 40 years, so he says that this number should be at least 40%, 40%. But here in this case, this is half of that. Now, if this number is not 40%, then he says that the quarterly sales, the average of these two numbers, this number and this number, the average of these two numbers should be 40%. Okay. Even that condition is not met here. This is probably the reason why the earnings rating is only 72. Now, if you look at the buyer demand, the accumulation distribution rating, it is A grade. That means institutions are buying the stock. Group rank is 40. So any company which comes in the top 40 industry groups is considered to be a strong company in a strong industry. Okay. But in this case, if I look at the overall, I would prefer that the EPS rating and the price strength both are in the 90s or at least the late 80s. Okay. I want the accumulation distribution rating to be A. The group rank should be less than 40, preferably less than 20. Okay. And you can see here the number of funds that have been buying the stock. It was 212 in September 23. Now it is 287. So the number of institutions that are piling onto the stock is increasing, but that is not coming on the back of strong earnings. Okay. So that's probably the reason why the stock seems to be stalling here. It's not, see, if you look at this relative strength line, it compares the performance of the stock with the Nifty. You see this gray color line, that gray color line is the Nifty 50. As you can see in the base, the line has been slightly rising or flat. But in this case, it is going down. That is, the stock is going down. So that is the reason why these blue dots that you see, this is the all-time high in the relative strength line. Okay. So new highs in the relative strength line. But as you continue to the right side of the base, the relative strength keeps on decreasing. It means when the stock was here, it probably had a relative strength in the mid 90s. Okay. Between 90 and 95. Now it has come down to 89, which means the stock is not doing well compared to the Nifty. You're better off investing your money in Nifty rather than putting your money in this stock. One positive sign that I see here is the volume is extremely low compared to the average daily volume. Okay. And this is what you would ideally like to see in a stock that is under accumulation. So this stock is definitely under accumulation, but I don't see a base which is convincing enough for me to buy. I would like this tightness in price to come in the upper first quarter of the base. Okay. You see here it is written 13% to pivot. So markets may draw a line here and they say that the current price is still 13% away from the main breakout point. If the price breaks that resistance, starts to go up, then probably the stock has some potential. But in this case, as you can see, if the stock jumps 15% tomorrow and your buy price is this green line, dotted green line, then out of 15%, how much do you make? You make only 2%. Okay. So I have an eye on this stock. I have not rejected it outright. But for tomorrow's watch list, I am not interested. Okay. Another thing to notice here is this is the daily time frame chart. If I click on the weekly, let's see how the weekly looks like. Normally, it does not take this much time to open, probably because I am talking on like a Zoom call. Probably it is taking time, but normally it opens in less than a couple of seconds. So let's see. I click on the daily again. Yeah, the daily chart is responsive. Let's look at the weekly. Yeah. So see, if you look at the weekly chart, okay, the blue line is the relative strength line compared to the Nifty. Okay. The orange line is the earnings uh, growth. Okay. Here you have the volume, and this red line that you see is the average daily volume, average weekly volume. This is a 10-week average weekly volume. I have not put a moving average on the chart. But as you can see, Market Smith draws that line for you, which is the proper buy point. So as you can see in this area, the stock formed a very nice base. They call it a cup with a handle. So this is a nice cup formation, a very large cup formation, and that here you have a new buy point. So this was the proper buy point. This was the first time the price probably went into the upper quarter of the base. So if I look at the base from here to here, probably this high was in the top quarter of the base, okay, on the weekly chart. Okay. So that was the right buy point, which is roughly 900. So from 900, the stock went to 1800, which is doubled. The stock doubled, okay, in just a few weeks, maybe 1, 2, 3, 4, maybe 10 or 15 weeks. Okay. In just 15 weeks, the stock has almost doubled. So this was the proper buy point. Now we are looking at this green dotted line. So we are not buying in the first base. Okay. This was the proper first base. Even this was not a proper base because it's too low below the high. So here you have a lot of overhead supply. By the time the price reaches here, probably the overhead supply is gone. Now here you are getting into the second base. Okay. So second base is generally risky than the first base. Here you would put a large position size. Here you will have to put a small position size. And as we know, it says 13% to pivot. So if this is the line which is the buy point, it would take 13% move for the stock to break that line on very high volume. Okay. And you look at this volume action, very high uh, volume here on the weekly chart. The weekly chart represents the true institutional volume. So that is probably the reason why the stock has a rating of uh, accumulation distribution rating of A. And that you can see that here the accumulation and these blue dots that you see, these are the new highs made in the relative strength line. So probably it's the 52-week high in the relative strength line. I don't know the exact definition, but the blue dot represents the new high in the relative strength line measured over 52 weeks. Okay. So if you have a blue dot in the base, that's considered to be very positive. Here in this case, there is no blue dot in this base. Yes, the volume is declining. So which means all the selling that you see here, it is low volume selling, which you also saw on the trading view chart. But overall, if I look at the weekly, if I look at the daily, if I look at the ratings, and if I look at the weakening base, I don't find this stock still convincing enough to buy. I would probably wait a couple of quarters. I would allow the stock to go up. Maybe in a couple of quarters, the earnings would come in. And by that time, it would have formed another base. And that would, I think, be the next right time to buy. Currently, I am not getting a proper setup. I am not getting proper consolidation. I am not getting a rising relative strength line. Okay. So, because of all of these factors, I choose to reject the stock. I choose to take a pass. Okay. So, as you can see, I have been discussing for like 10, 15 minutes. I don't know how much time has passed since I started talking on this stock, but this is the kind of deep analysis that I am doing just to reject a particular stock. Okay. Because once you buy a stock, then you really have no control because all the thinking that you can do, you have to do it before you buy, not after you buy. Okay. Because after you buy, it is all about managing the trade. So that is why I am spending a lot of time really uh, thinking about what is it that I want to do. Okay. So that is my analysis. So I want you to become a professional trader. I want you to become a thinking trader. Just don't mechanically follow all the rules. Think there is a lot of data in front of you. Okay, go through the data and look at the data. How is it going to affect price? Is this stock likely to form more basis in the future as it continues to go up? What if the earnings in the next quarter fail? Because we see that the current earnings was 21%. Before that quarter it was 54%. So the earnings has actually collapsed by 50%. Okay, so that is not a good sign. Although this looks like it's going up, but if you see the earnings, see it went from 54% to 21%. Okay, this is likely to should be increasing, right? At least the recent 3 quarters. But that is not what we see here. And by the way, this is quarterly earnings compared to the same quarter last year. Okay, it's not quarter on quarter. It is the quarter over the same quarter last year. So you also need to learn how to read this data. If you are not using MarketSmith, then you could use some other platform to get this data. Even TradingView gives you quarterly data. You can click on financials next to the right side of the company name, and you will get all of this data. You might not get the rankings, but majority of the data that you see here you can find on TradingView itself. So have a look at the data. I am not a proper fundamental analyst or kind of a. I don't invest based on fundamentals. I trade based on technicals. Technicals is the most important thing for me. Fundamentals, I am not giving much weight. But since veteran traders like Patrick Walker, if he says something, that carries a lot of weight for me. I would prefer buying companies where this number is 40% or average of these two numbers is 40%, because historically it has been observed that when you reach those numbers, okay, the probability becomes very high that the stock will continue to go up and give magnificent returns in the future. So I want to stack the deck in my favor. I want to put the odds in my favor. Okay, that is one reason why I would consider these factors. But I am purely a technical based investor. This is just to get some feel of whether I should really enter the stock at this point or whether I should wait, maybe give it a couple of more quarters. If it does well on the earnings side, the stock would naturally go up, and while it is going up it would continue to form basis. Maybe I will start with a 5% position size, bump it up to 10% as it forms subsequent basis. But the real buying point was here, which I have missed, and I don't know why I have missed that. Probably the distance between this candle and this buy point was too large, so maybe I ignored the stock. That was my mistake. So I'm learning from my mistakes, and that's it. That's what I wanted to discuss about this. So this is the kind of thinking process that we have to go through before we really commit to a particular stock. Because see, the market is not there to give you money. The market is there to take your money. So you have to really think before putting your money on the line. Let all the factors be in your favor and then make a commitment. And even while you do that, ensure you keep at least a 7 to 8% stop loss to protect your capital. Everything might be in your favor. However, the stock might still come down because it's the nature of the market. The probability is low, but the probability is not zero. Okay. Thank you so much.